pieces of ranges we've identified. So we have kind of what our final expectation here is, right, on this side, and like our final expectation on this side. Like where's the bottom of both of these ranges, right? Like this is the range we're in right now. We are inside of, and we could probably see this more on a 4 hour maybe. We are inside of, let me just delete this. We are inside of this range being tested against this range. So like this is the kind of the profit cap of the move. And you could even say there's like the next range down would be here. So we're going to mark this one as yellow. So this would be like the next range down that we'd be going after. And this is kind of the next range up would be, that's already tested. Something inside of this right here would be the next range, because there looks like there's some kind of maybe final level right here. Come on, I'm just going to mark it on the side. So it looks like there's maybe some kind of final little hold level that could exist right here. It looks like all this stuff is tested, and then beyond that up here, you know, go back further in time. So we don't really need to know that anyways. So we kind of have the parameters of our outer range, right? And we'll make these ones purple for this example. Let's go like a nice light purple. We'll make it kind of thicker so we can see it. Do the same thing to this one. Purple, do a little thicker. So we kind of have like, if this purple line breaks, we're likely going up to this. And we might have something in here. Like I really haven't dissected this, but it, you know, to me, it does look like this range is testing this, which is already back testing all the way to here. So maybe there's something in here that hasn't been tested. So again, this isn't concrete. This is just what I'm seeing on this time frame, what it looks like it could be. And this again, this could easily be, okay, this has been tested here and here. So your range would start at a minimum from here and work down. So the very, very possibly could be like a piece right here. I'm just going to mark it. You know what? I'll take the make. Oh, there we go. We just go on the side of it. There very much could be something here, right? So let's call that the range here to here, right? So you break outside of this purple and you're going into this right here. Possibly this, but I doubt it. That's pretty close. More likely you have a small piece of a range there. So when we're talking about the likeliness of where something can go, you look at how thin a move can possibly be. So if we were to do this, this is what we expect long term, right? Like this is where we're expecting to go before a bounce. So we're either going to go here and take a short down, or we're going to go here and take a long up, right? And that would be, you know, that's this piece of the range against this piece of the range. So you can see this range here is connected and this range here is connected. Perfectly fine. Great. Nice. And we're going to delete this. So when we're talking about how, like it's important to understand how thin a range is. How thin it is means how far could it possibly go inside of that range. So as we break this move down and we have some levels marked out here from earlier today, we have our levels marked out of what we're expecting, and we can even just maybe go to a 5-minute chart here, and we have the same kind of thing right here. Like you have your range right here against this range right here. So let's mark those ones as another color. So we're just going to color coordinate the ranges, right? So we're going to go like this, and we're going to say, okay, these ones are green, and we're going to go this green, and we're going to go like that. That's fine. Thick spring green kind of thing right here. So like this one, kind of thick. So we understand like these are the ranges that are associated with each other, right? And then you have this purple range here to that purple range there. And then maybe this is like a second part of that spring green range. Like maybe this is like even the thicker one, right? We'll make it a little darker, a little different. This is kind of just the next piece of that range where it could possibly go. Make it a different color completely. We'll make it.
So I think really the important thing to note about whenever we're doing how a move is developed, you go to your chart, and one of the first things that I do is I'm always looking to see exactly what had created this move. Like I can just kind of give my thoughts on the current space and what's happening with it. So I could just delete some of this stuff here, delete this. You know, whenever I'm looking to develop a move, I'm always looking. Get rid of that one, can stay. That can go. That stuff ignore. It's not important. Okay, we'll just delete it. Okay. So whenever you're trying to develop a move, first and foremost, market meta. Of course, market meta, move out to your larger time frames to see what's happening. Bitcoin's still on a move down. It's still laddering relatively off of this. So we can mark this as kind of a trend here. We're just going to attach it here and see if it has started to hard close other time frames which it has. It has started to hard close the hourly here. So, you've got an option here between, we need to see if there's any 15-minute hard closes. There's one right here, but you're within the same thing. Like, you've got the 15-minute close there. You're within the same thing here. So that's fine. You're not going to adjust your trend, because instead you're going to see if this move is willing to break up by adjusting it here, right? Like how we talked about, a move is able to cycle through time frames. Like, that's what I'd be looking at now, for the simple fact that there's nothing left. So we're going to say, okay, we're breaking this 4 hour if, right? If this is hit, right? So the hourly here, we're not there yet. So we can actually just leave this, and then, upon the close of this 4 hour here, which is in 2 hours, then you can adapt it to that hourly. So we don't need to do that yet, but that's what kind of we would do in the future. At that point, I would go and I would start looking for my levels. Like, the option always becomes long or short, right? The option always becomes, okay, we either want to long this move or we're going to short it. So if you're in a scenario where you want to take a short, like right now, you're saying, okay, we're still moving down. Well, you'd have to start looking for your targets, everything from reverse levels to, you got a reverse level here. It looks like it's been hit pretty good. I wouldn't really be going after that. On the 4 hour, do you have anything else here? So, on the 4 hour, we clearly see that there's only one level to test. So there's nothing else. So we can just immediately move down in time frame. And there would be nothing on the daily here. Daily would just be too big in time frames. You go to the hourly here, and then you can start from the very top to see, okay, here's where the hourly exists. What had happened? This is tested right there. Okay, so that's here. So you don't actually have a test on this. Oh, wait a second. Yes, you do. You've tested that one there. Have you tested this next? Yes, you did test it right there. So you can see where you can start to create those reverse level tests, right? And at that point, you would move down to here and say, okay, have you tested that? You did. That's why you tested this one in this moment. So when you've tested this, right, you've got to realize that it's testing maybe a higher time frame with this candle, because you did test this, and the next one should have held it down here, which is right now that's happening. But if this breaks, right, this is pretty important to realize. Right here, right, this is tested, which gives you this right here, which is tested right now. So if this breaks, everything else on this time frame is back tested. So we can kind of go and delete that and start looking for anything else that may be in the way, right? So you can go back and you can cycle back to this 15-minute, and you're going to want to just do the same thing, right? Like, you're going to want to just walk through your time frames and say, okay, is this tested or is this not? Because if this thing is going to continue to short, it has to do it off of a level, right? So you've got this to there. Next one would be here. Yeah, you can say that's tested because that's right there. So notice how it back tested that 15-minute reverse level after breaking that hourly. So it broke that hourly right here, and now it's back testing that 15-minute reverse level. So you can see how it's cycling through its time frames to back test also reverse levels, right? So you can see how it's starting to create something that might break the move. At that point, you would go right here and say, has this been tested? I would say that's one and the same test, because you could justify this as this was tested there. Now you're here. So next you'd be here. That's tested. That's tested. So let's, before we do that, go here and see, is there any 15-minute levels left? There's this one right here. So that's where we get to this level right here, 15-minute reverse. And there's nothing left there either. So now we're really getting thin here. Okay, we've got 5 minute. What do we have on the 5 minute, right? So now we got to go to the 5 minute and see, you're going to follow that same trail of moves. So now you're here. Because we're getting so nitty in the move, I'm going to start marking front and back side just to make sure we're not missing anything. Like, one was tested. No, they're both tested there in that moment. So that's fine. We can delete that. Then zoom in here, and you're left with a 5 minute level here that's untested. And that's it. So like, this is really, if you're developing this short, really this becomes your option. There's nothing left. It's like, it's going to attack this next to see if it can hold the move down. And if it does, it's like the perfect ladder points as well. So now we're not sitting here saying, yes, this is definitely going to test this and break down. But when you're starting to develop a move and make these decisions, that's how you have to justify it, because you've back tested all the different criteria. So when we're using that effective time, we have to also walk through the reverse levels. We have to walk through trends, like just how we decycled trends. Now we're kind of decycling levels as well. Like, what's left that can hold it? The 4 hours, there's nothing on the 4 hours, already broken. Hourly levels are tested, and then the reverse levels are tested. And you can see where they're not only tested, but it creates a logical trail. Like, even in this moment here, this reverse was tested, and then all of a sudden it goes up and attacks the 15. And then that 15 is tested here. So now the next part of it, but that's up 15 as well, I believe. The 15 is right here, which is right there. I think we walked through the 15 and found the proper part of the move anyways, which is fine. Now you can see it's going to go after the 5 minute. So you can see how it's cycling down in time frames to also attack those other time frames, just like we did with trends last week. So that's something pretty important to realize whenever you're developing a move. And you would do the same criteria as taking a long, right? Like you would sit here and go, okay, well, let's buy the 4 hour. Well, guess what? The 4 hour was tested. Okay, well, what's the next 4 hour right here? So this would be kind of your next 4 hour test if it came down. But I think at that point, it can come down much lower. And, you'd start your trend work on the bottom. So you would have like this to this. You actually have to start higher time frames. So you'd actually have likely the daily from here to here. Yeah, you don't have anything there, daily there to there, and that breaks down. So you actually do have the 4 hour from here to here. Nothing is hard closed yet. So it's just holding its trend, right? If you really wanted to, you could fly it out to here, but you're not there yet, right? But that would be an example of, you could use this trend, but you're going to have a little bit better accuracy with that 4 hour, even if it's breaking down. It hasn't, neither side has broken yet. So that's really what your trend work is, which is less important in this moment because you're looking to buy the hold levels, right? So then you could go down in time frames and you could start working through the same things. Like if this goes back down in tests, obviously you've got the hourly right here and it's pretty unimpeded and nothing's really testing it. You've got the hourly here. You've got the hourly backside here. That was held. This was held. So you might be back down at 37. If this fails, it might hit 37. Whatever this 37, 050-ish range kind of thing here, 37, 100. And then moving up, right? Like your development of your longs is just all the same here. I think really more of the important part is understanding that when you're trying to break this move up and start, building these bigger time frame hold levels and all this stuff like that, you can go back to here and you see the same thing happen where it tries to develop these moves and eventually it just gets stifled down, right? So pretty critical to know, right? Pretty critical to know what can hold the move down. So walking through those time frames is it's pretty important. Like your 5 minute is here next, and if the 15 breaks, that 5 minute would be the only thing really left that could hold it back.
Something very different, dark green. That's fine. There's a clear difference there. And then this could possibly even be associated to this right here, maybe. So this is something that's could possibly test. So you have kind of these ranges, right? So inside of here, you have a small, like the smallest piece of the range where it's going to go immediately next. So next in the move where it can go next on either side. The piece after that where it can go after that. So, if we hit this level and start to hold through whatever range here, break trends, it's going to go after that piece next, right? So if you break this, it's going to go after that, right? Just untested hold levels, just a different way to look at them, and so forth and so forth. But inside of this, we know that over the course of the day, you are likely going after this right here, right? You're likely going after this larger piece, and then over the course of even a larger time period, maybe a few days or however long it takes to develop, you have an even larger piece out here, right? So the deeper the color of the box goes here, so the more overlap that exists, the thinner the range gets because we know where the outline parameters are. So if we were to compare, what's the likeliness that this level holds this thing down for an infinity of time or for the next 5 days, and this is the final level, is based on how thin it is, right? Because we know based on profit caps that if we hit this level, we're likely going to this level. If we hit this level, we're likely going to this level, and vice versa, right? If we go down to this level here, we're likely coming up to the purple level here. That's fine. And then if we break over top of this purple level, we're likely coming down to that next yellow level. This is the profit cap of the move. Again, another way to look at the profit cap of the move and another way to look at hold levels. But now we're talking about how thin a range can be, right? So we have the next piece of this range, which would be, we have purple to purple. We have green to green next, right? And then we have this next one here, which is, and we're going to mark it from here. That's fine. This green to this green right here. Then we kind of have the current trend. Even right now, we have kind of a thinness in the range, which would be like this level here to this trend right here. So we didn't mark that one. we're going to copy paste this, put it right here. And that's fine. Actually, it looks like that's maybe what it even hit. Actually, I think it hit trend, but that's fine. What we're going to do is we're just going to mark this up here. That's fine. We can even mark it here. So when you are looking at how thin a range is and you're saying, okay, where do I buy? Which hold level do I buy? The thinner the range, the greedier you want to be. So if we know that it can go down to this region here, this purple line, we know that we want to be less greedy. We don't want to be chasing 1 minute candles in such a crazy range. Like, this is not a thin range by any means. But inside of this right here, when we know the possibility is, okay, here's a level even right here at 95.05, we know the possibility is that from that point, it can drop another 30%, another 40, 50%, even another 1.5%. Like, this is where we're expecting the larger bounce out here. This gives the interior pieces a thinner range. The thinner the range, the greedier you should go after, just for the simple fact that the next level, the next piece of it, can easily get hit. And you want to reduce the risk of taking that trade. So instead of being from here to here at 0.3 of a loss, or even here, which would be 0.5, you want to say, okay, look, how do I reduce the risk? You just go into a thinner piece of the range, right? By taking entry too high, you're simply just not acknowledging the fact that this has a long ways to still go down. So its range is much thinner. So we have to use greedier levels. Now, that doesn't say that if the range is bigger, we should only use the thinnest moments in our charts, but that is saying that
So that's what we'd clarify this as a pretty thin moment, because now when you say that word thin, you're starting to get into polarity. You're starting to get into the polarity of the move. Like, the thinner the move, the more polarized it is, right? Then you have to think of the thinness of the move as it can barely hold it, but if it does, it's so unexpected, almost deviation, right? You can think of it in that term. It can barely hold it, and if it does, oh my God, it's going to be a crazy move down, right? Because it really shouldn't hold it. So you could go here in the 5 minutes, and that's the next kind of logical point it could go. If you were to take this and now start dissecting inside of here, like, do you have anything? Well, you have a 3 minute. Do you have a 1 minute? You have a 1 minute backside. So then you have a range inside of a range. And you can sit here and say, okay, go back to this. And basically these cascade from 5 minute to 3 minute to 1 minute backside to 1 minute front side. So we don't really need to go further than that, right? So now you can say, inside of this range, what could possibly be the thinnest level, right? Inside of this 5 minute level, you could actually go all the way to 796, making your 596 level your reverse in the future. You could make this a reverse level for the future, right? Which could then hold it down right now in a moment where your logical trail is showing you reverse levels are being attacked because it's going after the greediest parts of the move. I think that's a really good piece of information to have. And I think that's really important when you're looking at this move developed, right? And how much it has developed. And I think you could even mark this here and do the same thing, the most extreme level, and then go inside of there and see if there's anything left in there that would be even smaller time frame as well. Looks like there's not going to be. Yeah, there's your 3 minutes. So there's nothing on the 3. Would you have anything on the 1 minute? Doubtful. So you did backtest that one. You have the 1 minute backside right there that held it. So you backtested this 1 minute here, whatever, this backside to frontside valley. So you did backtest the backside. You have a 1 minute level, but I really don't think this is valid anymore. Get rid of that. You can go back to your current part of the replayer tool. I really don't think this is valid anymore. It might hold the move down, but I think the risk you take associating with that level is extremely high. Rather, what I would like to do is I'd like to see that, okay, I know that we've been creating this trail of the move. I know that we've been creating the hourly test, the hourly reverse levels, the 15-minute test, the 15-minute reverse levels. We just broke the 4-hour trend. You're starting to decycle all information down to breakouts, right? You're starting to take all of the moves and show you the last points before it breaks out, right? This would be it. This would be it right here. So now you have to say, okay, the 5 minute, you can assume that's already pretty thin, right? It's a pretty thin level. Yeah, I mean, there's not much left after the 5 minute. If the 5 minute breaks, it's liable to shoot straight up, right? And then inside that 5, you have a 1. So if you wanted to go for the absolute greediest spot you could, it would be this 1 minute body of the candle, 38,796. That would be the absolute greediest part of this move you could go. However, don't be surprised if it stops here at the 5. Also, don't be shocked if you do go to 38,796 and create this 5 minute as a reverse in the future. And because we've been creating so many reverse levels, I think that's pretty critical information here. Therefore, I wouldn't take the 38,596. I would then instead look for it to be the reverse level for the future. So it would be my second entry on a short if I was shorting 38,796, which I probably would in this moment. I think you're going to have something happen like this. You have 3 scenarios that can develop. You completely go through all of this, break out from the trend, which is fine. This is already a pretty thin level, so we have to realize that's a possibility. Scenario number 2 is you hit the 5 minute and pull back. At that point, I wouldn't be looking at this anymore. I would say this 5 minute is tested, and that's it. Look to break this 5 minute here, right? That's scenario 2. So if you hit this, I would just kind of invalidate these other 3 levels here. Scenario 3 is you hit one of these other ulterior levels. More than likely this 1 minute level, just shy of it to hit the wick of the candle, but not quite the body, and then create this for the reverse in the future. Now, the important thing to note here is you are taking one of 2 trades. You are not taking this and it goes down and starts to go in succession, and then you get out and also take this. Once this executes, this is executing the entire range here. So you're not taking that trade. You're picking one spot of or the other. So you're either picking this to enter a short or you're picking this to enter a short, and that's it. There's nothing in between. You take one or the other. The only scenario where you could take 2 is if it hits this 1 minute level and goes and breaks its range, like this little interior trend it has. At that moment, then this 5 minute becomes the reverse level for the future. So maybe you take the short down to something like, I don't know, wherever it goes. Maybe there's a trend or it goes all the way down to here. Then you can take that 5 minute reverse at that point. Or how far it goes down, it doesn't matter. But the fact is it has to break this kind of trend that it's created first. And then that 5 minute reverse can be confirmation of a level to take in the future, as long as you're starting to break the move down, right? Then it can ladder off of this from this, right? So that's really the critical information on taking this trade here, is realizing all the things that we've been discussing about decycling this move on time frames with trends. Because think about this for a second. The trend is telling us that the move is going to break down, right? Like trend is breaking. You've got a 4-hour trend breaking. It's going to create a 1 hour. It's going to create a 15. Those are things we can't adjust to yet because they're not in creation yet. And the 4-hour will break likely here. So the 4-hour will likely break, right? We've got the 4-hour breaking. Yeah, it needs another hour and a half, hour and 20 minutes. So we've got this 4-hour breaking, and then we're going to have guidance on trend of what we do. And likely it's going to break to the hourly, and that hourly is going to hit this 5 minute, and then it's going to break to there to the 15. And then, you're in that same scenario now where once either this or this is tested, say you come out here and then you break this trend. It's like, okay, the range is tested, and this was part of that move being decycled from here. So that actually just snaps the whole entire move, right? So now you're starting to decycle all your information together. Now you're starting to, let's get that back. Now you're starting to say, okay, I understand what timeframes are going to be attacked because we've created that logical trail. Like this move is developed in a way that it's kind of showing you what is happening. The move is developed in a way that it's showing you, hey, the 4-hour reverses have been hit. And it's not always going to be reverse levels that are hit, by the way. Sometimes it's going to be hold levels. Sometimes it's going to be trends. In this move, we found that it was a reverse level very quickly just by looking at timeframes and seeing, okay, it's going past bodies. It's likely testing lower timeframe reverses, which it did. It had tested the 15 or the hourly, which had then tested the it had tested this 4-hour here, and it can hold this 4-hour again. But I would be less likely to take the 4-hour. I would be more likely to take the 5 or the greediest part of that. And so the 4 hours there, it tests, and then the hourly is there, and the hourly back tests. And then the hourly has the 15-minute trail it creates, and there's no 5-minute broken yet. So very clean and simple. You see the trail of logic that was created, and then you see what's being broken. And now you're starting to see trends break as well. So now that's not to say the move is going up yet. Like I'm making it sound like, oh, it's starting to break trends as well. Don't take that as well in terms of like, oh, it's breaking as well, so now the move is gone. No, like this, we can still create larger time frame events here. Like we still have, the superseding moments from up here too. Like we still have, legacy, global. Well, probably just this is global and local at the moment, but oops, not the 12 hour. We don't want to go there. But you can see where this 4 hour is more likely to act as a reverse in the future once again. So it tests the 4 hour, goes after the 1 hour reverse, hits the 15-minute reverse, now may go after the 5, right? And then it's likely that this could be a reverse again in the future. But the reason I wouldn't be using it right now is because you have developed that architecture where you've shown that it's not like there's another 1 hour reverse that's just sitting there. Oh, there's another, there's untested 15-minute levels. No, it hit that hourly, it broke it, it went after the 15. If it moves up, it's breaking that. So you have to understand that you can see when those levels are back attacked. If that hourly had never gone and went after, and then also the 15-minute hadn't gone out, like if that hourly, this is the 4 hour, this one was the 1 hour right here. The 1 hour was like roughly around here, right? The 1 hour was roughly around here. Yeah, it's right here. So there's your 1 hour, which is totally fine. The 4 hour, the 1 hour, and now the 15. Like if it didn't go after the 15-minute, which is right here, like we followed the trail down to right here. If it didn't go after this 15-minute right now, I wouldn't be so likely to say that this 5-minute level, the range inside of it, can hold it. But it's already created that stigma where it has hit the 4 hour, it's gone through it, it's hit the 1 hour, that 1 hour had broken, and now it's hitting a 15. If those things didn't happen, if it hadn't hit that 15 yet, and has a 5-minute level in the move that could create a reverse off the 1, I would say like, yeah, okay, the 4 hour could still be in play. And it may still be in play, but I just think when you're assessing the risk of the move, your smart trade becomes right here. But possibly between these two levels, your smart trade becomes either here or here to create that reverse 5 in the future, because you've already hit the reverse 15, and now go through the 5-minute level and create that for the future so that it can break its move in the future, because you're creating the breakout point in the future. Like that's really, I guess, the key thing here. This could be the breakout point in the future, because once this wicks through and tests this, whatever, this is the 2 1-minute levels. That's front side, back side. The one that we deleted was the 3-minute. So once you've gone through this, you've broken your trend on the 4 hour, you can start cycling it up to the 1, to the 15. You have the trail created to break back the move on the 5-minute. So you've back tested the 4 hour, you've back tested the 1 hour, you've back tested the 15, you've created the 5 as the final reverse. And then I think at that point, if you come out in the future, and let's make this yellow, I think at that point, when you have nothing left and these are all gone because this was tested, right? Because that was tested and there's that 5-minute reverse level there. I think at that point, you then have a choice between, okay, we cycle to the hourly here. Maybe it cycles to the 15 here. Maybe it cycles to the 5 there. And then maybe it has the 1 minute here. And then the 1-minute breakout is here. So now you have a choice between, okay, does it hit the 4 and fly over? Because at that point, I don't think this would hold. I think once you've cycled that trend and you have the 4 hour reverse, that largest time frame would be the final moment. However, if you don't start cycling this, like, okay, you go, let's go back one more here. Let's go that. Then the other scenario is that you hit this hourly, right? You go and touch this level and fall straight down, and you don't cycle this trend. Instead, you're starting to create a new trend altogether. Then I think that's the scenario where this 5-minute is in play and not the 4 hour. But the scenario where you're breaking the trend, I think this 5-minute isn't in play, but the 4 hour is. So when you start cycling this trend through the time frames, that's when I think this 4 hour reverse has to hold. Hopefully that makes sense. That was a little, anyways, I think hopefully that makes sense. But you see, it's all about the architecture of the move and what it's creating for you, because that architecture will guide you. And what happens with this trend will guide us whether we use this 5-minute reverse in the future, or whether we use this 4-hour and then like this becomes breakout, right? The breakout scenario is one where trend has cycled and cycled and cycled and cycled, right? Oops. Whoa. How did I get to that? I held control and clicked the button or something. What happened? What? Did I just unlock a secret panel? I like hit control and did something and it unlocked some secret panel. What the hell? Okay, whatever. Dude, what happened? Anybody seen that before? I quickly closed it because I was like, get out of my way. I'm going to have to watch a replay on that one. Secret panel unlocked TradingView beta mode. That's a secret. TradingView gives me secret access. Dude, I swear there's like 100 different magnet things in there, right? Has anybody ever seen that? I'm investigating this replay. It was just the big dot in the panel. Did I control click something here? Anyways, okay. I'm so so rattled by that. Okay, let's continue. So that when you cycle the trend, like I think the trend becomes the controller of that 4-hour reverse level. If you've cycled your trend, I think this acts as, you know, trend cycle has broken, 4-hour has to hold. If you haven't cycled that trend and instead you've done like this and you've gone down and now you need to start making new trends off the other time frames, that's where I think this 5-minute is the reverse. So you have two scenarios: one where trend is broken and cycled and the 4-hour becomes the point of polarity, and the scenario where the trend isn't cycled and then the 5-minute reverse becomes that. So then I think it also guides you into which level you should take, because if you sit here and linger around like this and this breaks and then it goes like this and this breaks and you've cycled one trend and then you've cycled another trend and another one and another one, I think this 4-hour, the greediest point could be this 5-minute level like that. So I think then you can even introduce a third scenario. But the architecture will tell you, because based on what the trend is doing, you can say, okay, how much trend decycling is left? Well, if we still have more time frames to decycle, we still need to pull back, right? If you don't have any decycling left, you've got to start thinking, okay, the next big time frame breaks, this thing's gone, right? So I think that's the dot above the ruler. Is that what I hit? Oh, I hit that thing. Okay, yeah. See, I don't ever use these tools. I thought I entered secret mode. Yeah, and that really, that architecture is going to develop it for you. That architecture is really going to tell you where you should start thinking about taking those smart shorts right here, and you know, and then you can use like what's left in the move, right? How thin is the move? Because the move isn't that thin yet, right? Like the move isn't that thin. You still have a 4-hour reverse. You still have more trend to break. That's not to say you can fly up and go over, but when you're looking at these extreme shorts, like that's where they happen, right? The 1-hour origin, I haven't even checked origins. It's possible. Right here? No, it's not an origin yet. Has to test again. It's just a tested level right now. Geez. Yeah, I mean it could, but then at that point you would say it could go up and maybe test that greedy 1-minute body to create the like that would be starting to get really crazy. 38,443 right here. Yeah, like I mean it can. I don't really like the origin levels right now. It can. If I mean that's something you have to decide after these levels get tested. You know, if this goes up and breaks down, then it is an origin level. Then that becomes your breakout moment, right? So then that becomes right here. That becomes right there. That would be good if we had already tested this. There's no 4-hour, of course. This is quite close as well to that. So you've got origin as well as inverse level. Yeah, they're pretty close. They're basically on top of each other there. Yeah, they're pretty much on top of each other there.
Larger the range you're going after is the more likely the scenario, right? Like over time, as this develops throughout the day, it's just like when this level gets hit right here. This level got hit right there. Well, that wasn't a very thin piece of its range. That was exactly where it's supposed to go. And look how far it drops down thereafter, right? It goes right to its range, which is right here, right? So it goes to its prospective range. The problem when you have range thinness like this is that again, the likeliness it's going to go after those is just a matter of time. So if you are going to play these kinds of interior moments in these charts, like right now today, we looked at this level right here, and we ended up taking the 5-minute level, which was something like this. There's still a lot that this thing can move down. So the range is extremely thin. Like you've got 0.3 here, you've got 0.5 here. Like you're getting close to liquidating if this wicks down a bit, right? So if you have the ability to move down to a deeper range that is less thin, your chance of going there is higher. So when we talk about range thinness, oops, we need to delete that. Oh no, we don't. That's good. I thought I misclicked. When we talk about range thinness, it's going to higher time frames or lower time frames, and understanding that there's a lot of movement still in this. So if you're kind of picking a level where you want a long, the thinner the level, the less likely it is to hold. Just for the simple fact of kind of common sense here is that, okay, if it's going after this level, it's going after this level, right? If it's going after this level, it's going after this level. If it were always to stay in a thin range, it would just continue to move sideways. Your thinness on your range is going to break on one side or another, right? So like the thinner the level, the greedier you should naturally be inside of the trade, just for that simple reason that it still has room to move down. It's not guaranteed that, oh, here's a hold level, you're going to hold a level. Now, whether this may be true or not, on a larger time frame, you might simply just be missing a trend that broke, right? You simply might just be missing something like this that adapts to here. And you simply might just be missing a trend that broke and is hard closing. I guess this one hasn't hard closed yet, but I don't even know if this is the right trend, to be honest with you. I just added this on the screen, very interior local trend. And you have to think about it. Like I trained you guys to take the greediest levels on the biggest time frames first because they're not thin, right? Now, when we first started this, it was to take front and back sides of large time frames because those aren't thin levels. But stuff like this is very thin because it has a lot of movement down that it can still go after, which the profit cap in something like this is small. Like, okay, fine, from what, this to this, like the profit cap here is 50%. It's still a good trade. We should have still been in this and making 50%. I wasn't greedy enough. And I should have realized that how thin this level was, right? Which is, again, fine. I would rather just get out with a very small loss than to possibly risk being liquidated down to a position down. The level's so thin that it can just go after the bigger hold level. But the thicker the hold, like the thinner the hold level, the less likely it is to hold, right? Because you're just simply using interior time frames. Like it's not guaranteed to hold, right? But you start using moments from outside of your chart, right? Like even, use something like this. Like, does this get hit? Yeah, perfectly. That's not thin at all, right? Like, look at how long it's been taken to develop. Something that would be thin would be like trying to trade this right here, trying to short this, because it has a lot higher that it could possibly go. So this becomes a thin level that has a small profit cap. This is less thin than this level, but it's because it's inside of it, right? Like the deeper the Pandora's box, the thinner the level, I guess would be a good way to say it.
And yeah, then you get like level thinness when you have big ranges between each other like that. It's polarity, right? Like how thin something is polarity. The thinner it is, the more polarized it is a good way to think about it. And yeah, so WD said, love that you're mentioning how a reverse level works in the moment. This is something I've noticed happen for a while when price deep dives a larger time frame to something thin, which can still ladder it. Level has a good reaction, then the larger time frame acts as a reverse. Correct. So then that's exactly what we were talking about here. When you have what could be the next reverse level in the charts, because there's no 15, obviously, we've cycled down to from the 1 out, from the 4 to the 1 to the 15 to the 5. And this reverse level in the future acts like this, right? And then I think there's a really cool way that you can have kind of some critical information here. So this is kind of going to be a little over the top here, but let's do it anyway. So then you have what could look like this. Go past the reverse level to see where this pulls you back, right? If it pulls you back to the range, you can kind of expect this stuff to break, right? If it pulls you back to its most interior range. So if that interior range starts to hold and develop over whatever trended adaptation there is, you can kind of expect this to collapse, right? If you instead go like this and pull back below that range, you can start to say, okay, now we're looking at this being the reverse. So then you'd probably take exit here to get this reverse for the move to break down. So I think it's really cool when you can start to think about what level is hit, right? So I want you to think of this in a way of, I don't have a word for it because I've never described it. So I don't really have a word for it. Let me just think about it. So now you can start to think of which level is hit creates which funnel, right? If the 5-minute is hit and it holds its range, you can kind of assume that this move is breaking, right? If the 1 minute gets hit, right, and it holds its range, the 5-minute is what will be polarity. If the 5-minute gets hit and it completely breaks down its range, the 4-hour level is what's going to hold it down, right? If the reverse gets hit and breaks its range, expect it to stop at, well, probably likely this reverse level, the next range, to see if it can go after this reverse. So it's almost as if these tests give you one criteria outcome, like the funnel. Well, it's exactly the funnel. It's like trying to understand what has to hold it after that has been tested. Like if you hit this level, what has to hold it is kind of like this range that's developed, right? Like this range, this trend has to hold it, or at a minimum, the range has to hold it. So if this gets hit and you go down to here and you start holding the move, well, this is exactly what you would expect. And then you would expect either the 5-minute reverse to get hit or the move to completely break out, right? So you almost have to think of, when this level is hit, what does that mean? When this level is hit, what does that mean? Like, which range can it go to? So if, for say, like this, if this is hit and it pulls back and holds this range, like you really shouldn't expect this 5-minute to hold. And if the 5-minute does hold, it's going to go for a huge dump down, right? Alternatively, if it hits this 5-minute exactly, we have no reverse level candidations for the future now. So now the breakout is going to be much lower. Like maybe the breakout now becomes here because you have no reverse levels, right? What would have been the reverse level actually just creates the hold level. So then it kind of has to also hold this point. And then, if this holds and it starts to break up over this, the move's also gone in a sense, right? So you really have to, it's really interesting when you think like, okay, which level is hit? That means it can go and it creates its own funnel, right? So start thinking of the funnel from that moment. When your moment is hit, start thinking of the funnel, right? If it's that, you have different funnels, and the funnel becomes, okay, this range gets hit, this range gets, maybe this trend gets hit. Like what happens if you come up to here, you hit that level, you bounce off here, right? Well, you should expect the reverse to get hit. And then if it continues to hold, there's nothing left, right? There'd be like a hold level here. And then if you break over that hold level, the move is gone. So then you really can create the funnel. And it's really interesting when you think of what are the possibilities after you hit this, right? Like this is the funnel, and this is what becomes a little hard to start weeding through and dissecting, right? So that's really where you have to start opening your mind to all these different possibilities. And I see you said, I feel like I make all sorts of mistakes with these funnels. Yeah, and this would be completely normal because you've never looked at charting in this way, right? You've never looked at charting in kind of that deductive manner. Well, maybe you have, but there's a decycled manner where there's only so many possibilities inside of a funnel, and then moves decycle to those next possibilities, right? But then it's really interesting when you start thinking about, okay, it really makes you a good trader when you can start to think about, okay, what do these levels hit? Like what has to hold on the bottom side to represent this? Like, okay, well, the backside's already held here. So if you were to hit this reverse level, you'd pretty much have to, you've got a trend here like this. You would assume to break this trend, right? You would assume to break this trend. So in that moment where that reverse level is hit, what's the last thing that can hold this up, right? And then maybe you have a level here, and then maybe there's a reverse down here somewhere. Like maybe this is a reverse off the ladder. I'm just going to take a wild stab in the dark and say this is a reverse level right here. And then if this holds, you've got your range trend, right? So it becomes really interesting because say you take a short here, right? And you create all the possibilities. You stay in the trade until you see which one is hit and respected. Like it's almost like trigger points, like advanced trigger points in a way. Daily there, move down in time frame. You've got a 4-hour here. Okay, so reverse levels, right? The next 4-hour reverse level will be right here. Perfect. So then the funnel of possibilities becomes very straightforward because you've got your reverse level here, which is telling you that it can go after this as its kind of final moment next, right? Which is exactly what happens, and it continues to hold this move, right? So at that point, you could even introduce maybe an origin level and say, like, is there an origin here? Not there, not there, right? Not there. Origin level here, not there. Yeah, there's really no origin levels in this. Maybe there's a 15-minute. No, not really. Let's make sure I didn't miss anything. I feel like there should be an origin level here somewhere. Origin 4, broken. No origin there. No, there's no. Oh, yeah, right here, right here. Oh, right, this is that move. This is that move we did. So it would have needed to break over this. Yeah, that's that move we did, of course. It was looking at this and saying, I really feel like there should be an origin level here if you're going after reverse levels. So then that becomes it right there too, right? Like that funnel of different things to go after, right? Like origin levels are often connected to reverse levels like this because they go and they hit, you know, they'll have a level here that's wicked through, and then you know you create some kind of attacks to go towards that level, right? And that typically one of those reverse levels, they do create origin levels, so that's just something to be aware of. That's why it was kind of like there has to be an origin level if it's there. And then I saw the 4 and remembered that's exactly what we were going after, was that 4-hour origin level off the reverse. So like you only have so many possibilities of what can happen, like in any given move, right? You only have so many possibilities. Like even go to this right here. So like what was this level here? Was this ever tested? Oh, there it is. It's tested right there. And you know, really at that point right there, there's nothing left above it. So like what do you have left? Like even if you were to go back to here, no, we want to keep the replayer tool up. Go to this moment here. What do you have? You have the backside tested right there. Okay, good. So you have backside tested there. That means you'd be at this level next, right? Like reverse level. Oh, okay. What's next? Next one would be this guy right here. So then, you know, this would be right here. So now you're really just looking, again, another reverse level scenario where, you know, it breaks over that and just goes for its 4-hour level, hold level that it has to break. So like there's only so many possibilities that you can have. Do you have any daily trends here? Daily to daily, right? I believe this trend broke, didn't it? Daily to daily needs to break. This is your level here, origin here, here, origin right here. Just make sure we don't have anything on the daily. We don't really have anything on the daily. Although in the future, that could act as an origin. Origin right here. Does it break it? No. Origin rejected. You know, dump the move when origins are rejected. And that's what origin levels do, right? Which then, you're talking about this in the future, possibly. Daily. It's this right here. There you go. Daily origin. That was the first level created, was right here. Yep, daily origin. Daily origin after the reverse. So you really just, it's really just about the broadening of opportunity starts. There's like so many things that can happen. But then it quickly takes away 95% or so of the possibilities when, say, when say like an origin level is hit, 95% of the other possibilities are gone. Or a reverse level is hit, there's only a few possibilities that could happen. How does one learn all the possibilities? Some of the courses, some of these mentorship sessions. Yeah, I mean, I haven't taught everything yet, right? Stay tuned, question mark. That's the best answer I can give you. Yeah, I mean, mentorship, right? I haven't even released all my material yet, so there would be no way to learn it all now other than just being in mentorship and getting taught it first.
So we have our level here, okay? 96.85. And you can see we have 96.84, 49 as our sell. So when we go into this, let's just go to a 3-minute chart. Sure, that looks good. 3-minute chart. 96.84 is our first sell. So that we actually got filled on that. That was actually my price that held it down. So you can see that because I had about 25.
I just realized we're on ranges now. Okay, we'll continue on with ranges. Sure.
Bitcoin there, 96.84.49 at the top of the screen. And that's where I had taken my sell. Okay. I rebought at 96.93, exiting the trade. Well, this was sitting there for a little while, but anyways, at 0327, right? Profits are taken 96.33 down here. So profits are taken down right here. Just really good spot to take profits. Really what I was looking for was it to come back up and test a higher level. I was looking at, there was a little bit of a deeper range in here that I thought I could get a second scalp on, which I did indeed take. So the first order is filled. So let's talk about that. This gets partially filled, sold right there, right? So 96.33 resell. Why do I take 96.73 here? What would have justified that? You guys guide my trade here. What would have justified me taking
ladder point?
96.73.
A ladder point here in this one.
So we don't see anything here. So what do I do?
1 minute.
Oh, okay, so let's go there. So where's the 96.73?
This one.
So let's mark that and see where it is. 96.75. Aha, take the perfect second trade. Okay, so second trade comes 96.73. We get filled for 25. 74.34. I upped it $1. I got even greedier. I said, you know what? I want to be even greedier. Negotiating for price, right? Anyways, it goes to 96.75. So perfect first entry, perfect second entry, perfect first sell. But why, if I think this is shorting? Because Dilbert said it was polarized, which he's right. The move is extremely polarized. So why 96.50 do I decide to get out of this trade? If this thing is so polarized that it should pull back like $1,000, like it did the following day, why do I get out of this trade?
That's where you because I can follow everything, because polarization, next ladder point. I would say indeed like next ladder point, but indeed like.
So you're saying that this is the next ladder point here?
Well, or maybe,
and it's true. It's holding the move down.
Yeah, and then again next ladder point, because but maybe it's because not experienced enough and too biased that this will short it down to like 8,800.
Okay.
And missing the signals, but indeed why?
But why do I get out of the trade?
Right? I guess it's holding this one here, like it's holding some level in here. Why this is the one?
Yeah. Did you not hit a leg lower down, and that told you this isn't continuing?
Nope, nothing to do with the leg.
You're not hitting your targets on the bottom side.
Nope.
So trend and
who drew that green light?
That's me.
Perfect. Gilbert, bang on.
So I think it's important to know that whenever you're in a trade, even you could go here. Let's go maybe to a smaller time frame, 15-minute, right? Whenever you're in a trade, say you're in a scalp, and hopefully we can demonstrate this live. I was hoping that this would execute, or I am hoping that this will execute today, so we can work through the trade. Say you're in this moment, right? You're say long on this. Say you took a long here, right? Only hold double on the chart, floating level, right? Pretty perfect. Yep. Don't even need to switch time frames. Pretty good. So what would stop? Well, like what would get you out of this trade, right? Like what would be the point where you get out of this trade? This is pretty interior range wise, so you can't really go here because you don't have anything, right? So you'd have to go from here to here, right? Just like your range trend. Which on the higher time frame, let's just make sure we're not missing anything, because we should always be starting highest time frame down, right? Yeah, you're not going to have anything on the 4, the 1, 15, hourly. Aha, right? So you have this here. You have the floating level, right? So you've got somewhat of a range, somewhat. That's somewhat of a range. So if you were to start the hourly, go here to here, you would have, say you're in a short, right? Like what justifies you getting out of the short? Let's even just take this on. Let's recreate the same scenario. Say you just took a short on this trend right here. Like what justifies you getting out of that short? Well, you got a hold level here. This continues to hold. Reverses off of this here. That continues to hold. That would be the start of it, right? Like think about the funnel of possibilities of what could happen, right? So you get into this trade here. Trend is holding the move, and you've got your ladder point or your hold level that gets hit. Okay. This shouldn't be holding the move. This was already hit. Okay. Here is your trend right there, your range. So your range is holding. So that's the first thing. Your range is holding here. So all of a sudden, Your range is like, oh, okay, well, we have a range trend. We've hit our hold level. This really should break the move down, right? Well, your range is holding. Next, you are right here. This really should be a point where you're saying, okay, I need to get out of the move. If this continues to hold through trend, like obviously this is all invalidated and you're in a much bigger part of the move. So this can just, well, okay, you know what? We can keep that. That's fine for now. There it is right there. Breaks the local. It's probably going to shoot up now. Yep. Breaks the local, shoots up. So that's really how you have to look at scalps as well. That's really how you have to look at scalps as well, because you're going to run into the same situation whenever you're talking about ranges and taking trades. You have to understand the range and what it's telling you. Even interior like this, let's go to something else. I don't know, go to, I don't know, let's pick a spot in the charts. Okay, this looks kind of good. You hit the level twice. Like, what would you be looking for here, right? Like, what would you be looking for? What would you be looking for? Say you took a long here, right? Let's not talk about the shorts. Say you were like, oh, I really like this backside level. It's 4-hour level. It's holding its move. Like, that's great, fantastic. Like, what would you be looking for? Say you got long there. Like, where do you exit this trade? So let's kind of clear this up a little bit. Let's go here, 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 here. Let's just delete it all. Let's just delete it all. Like, what would you start marking out to say, okay, well, hit a floating level. Okay, so we know we can develop a range off that. So we're not there yet, but we can maybe go down to the hourly. We need to maybe just go one more candle. You took a trade there and you're like, okay, what do I do? First off, looks like you have a localized kind of origin point in the move, right? Like, first off, you've got this local origin point right here. So it's already tested once and twice. You've got a local origin point here. So if this continues to break the move, right? Like, let's think of the funnel of possibilities. We've gotten it along there, right? So now we can, first off, let's color code these properly. Gray. Move this down to here, right here, like this. This is this reverse level, which is good. That's hit, right? So you can see where that reverse level gets hit pretty perfectly. Let's make sure we're on the right candle there, pretty perfectly. Next would be this one here, right? This one's not really respecting the move. So does it maybe we think it's not really a good spot to hard close this on the 5 maybe? Yeah, there's a hard close 5, right? I wouldn't get out of this trade. This move looks like it's breaking, right? So that would be kind of the first thing. Although you're not breaking this origin, but you are starting to break. You haven't closed this yet, so maybe a little premature. So maybe we still need to develop this a bit more. Then you have the 5 minutes broken. What about the bottom side? What could you develop there? Well, you could have your trends, right? Oh, we made a mistake. Start highest time frame first. Oh, no hourly. Perfect. What about 15? Okay. You've got this here, right? What is this, the 15? Okay, let's just go gray. Got this here. You've got a floating level right here. So this starts to become what can hold the move up. So there would be a few different ways you could take this trade. You could, if you bought on the bottom, you could sell this level here. So you could have taken your trade and you could have sold it like this, right? So if you wanted to execute your trade with a target, the lock up profits, that would be one. Another one is you could use this as a shield to your trade, because assumingly this will create trend. Is there anything else that also executes on the 5 right there? The backside is tested. So, you could even go down a little bit more to this reverse, which is the same thing as that hold. So you could even just go like right here. You don't really want to hard close this. So you have two different ways. You could either, again, you could exit on your target being hit, or you could use this as your shield to the trade. Yeah. Maybe we should just hit play instead of stepping through it like this. There it is right there, right? So you can see where, you can delete this, you can delete this. You can see where you could have justified different spent shield to create trend, which is now another shield. Yeah, you can see where you can justify different exits in your trade based on the funnel of possibilities, right? And really that just goes back to going to here and saying, okay, we have an origin level. You have a hold level that's not broken like this. You have the smaller time frame, which was hard closed. So then you really have that choice stylistically of what you want to do with this trade. I don't think it's wrong to sell this as a target, and I don't think it's wrong to stay in to hold here. I think you'd have to have different prerogatives. One would be more of a scalp trade, and even this is, you know, already bordering not a scalp trade. 1300 to you know, an hour and a half. That's, I don't know. I guess you could consider that a scalp. Over an hour really isn't a scalp, but if you wanted to stretch it a bit, you could consider that a scalp, and that's fine. So you really do define this as, are you looking for quick profits and getting back in on this level, or using this to justify a swing trade, right? So we already know it's this one that gets hit, so we can just hit play. There wouldn't have been much more to be gained by going up here, maybe like another 1%. So you have 4% or 5%. Yep, another 1%. So, you know, target there or target here, and understanding that now when this hits, you can develop a range. Floating level gets hit. Let's verify other time frames too. So we do have the hourly as well, right? 15 in the hourly, all together at once here. So you don't have anything there yet for a range. You don't have any range you can develop here, right? Because really you're looking, this is the floating level that gets hit, and now you have to start going backwards in time actually. So now you have to go back up in time frames, and you have to say, okay, 4 hours hit. So your range is actually from there to there. Highest time frame, right? Your range is actually like this. I don't love it, but it's what we've got. I, by choice, wouldn't use this. I might go something like this and develop kind of like a shorter range right here. I think this is more what I would use. And then I would put this as an two active trends, waiting for them to become non-active. And then I would risk assess the greed of the move based on these two trends. What could be like a really interior range trend, and what is more likely the accurate trend. I just hit play here. Oh, we're current on the move. Okay. So yeah, I mean, that's really going back to this move. How do you justify the trade, right? You have to justify it based on the ranges. Okay, let me catch up on chat. Looks like there's quite a bit being said here. There would be a range now on the bottom. Now, yeah, so I think that's, you said that before I created this, I believe. Spent shield to create trend, which is now another shield. Yep, exactly. So that shield is going to be what creates that range, and that's why I use this here. I mean, you could go and say it's the hourly. Yeah, but then you have this as your trend, which I also don't like. Like, I don't like that as a trend, but I do like this as a range trend. 15 an hourly confluence, but also at the break level making a higher as well. Going long again on that spot made even more sense than you just shorted that upper level. No, going long on this spot made more sense because it was a floating level. Like if you know, go to the 4, it was the first 4 hour tested, and then you do have kind of a floating level there. Like you have something that hadn't really been tested, like it broke up and it has a floating level, which you can then develop a range, but you're not quite there yet, because really what you want to do is you want to back test a deep, like the kind of the deepest part of the move now. Like now you'd want to back test possibly, like you have two options here, because you want this to develop, like you want this to develop the range. So floating level gets hit, you can develop the range off this. So you really have this right here as the backside. What broke that move out is what can hold it up. So you really have this as a long. I don't know if I like going that greedy, and I would rather start on a higher time frame here. So you have hourly backside. You want to go deeper in that range to find where that can go, because remember, right? Let's go back a week here a second. Then you have a floating level. You have your floating 15-minute level there, right? We took it off the chart, but you have your 15-minute floating level. Now it's not going to be a hold level that holds us up. Now it's going to be like an extreme ladder point. So really what you're looking to do is you're looking to find like, okay, there's a reverse level right here, right? That's the floating level that got hit, that 15, I believe. Yeah, that 15. And here's the reverse backside. So now you can just say it laddered off the backside twice, right? Now you can just say, oh, well, here's the backside of the move. It's just laddering off the backside. And then you could develop a real range from here to that backside test like that, right? So then you could at least develop it that way. I think it's a little premature in the move to be doing that, but at least that's how you could develop it. Backside. Yeah, and then often people just say, oh, it's just continuously laddering off the backside, or it's holding the front side, right? Like it's holding the front side. Like you're looking for that point in this trade that can ladder the move while using that floating level to create that range. You could use that, but I don't like that. It's too premature in the move. You really want to have the range developed after the levels hit. So after your floating level is hit, like here, for example, 15-minute floating level, and then you really want to develop it off of this, which you could go and say, here's the backside. It could test that backside, which is laddering off the break of the move. So if you say, okay, as long as it doesn't hit the leg of the move, so as long as it doesn't hit its break level, it can still ladder the move. And then that's where you would get that from, right? Like as long as it doesn't hit this, it can still ladder the move. So that's where you could get that from. You could also have this right here. I wonder if you have a smaller time frame origin that you could find. It's kind of an origin right there, right? Don't think you're going to go any lower, but we could check. We could check just to make sure. Yeah, I didn't think so. You have this, but that's like kind of all within the same thing. It's like a few dollars away. Then you have the 1 minute right here. Okay, so you have a 1 minute right here, actually. This was the very first unbroken low. Yeah, it's right here. So then that's what holds the move up, slightly breaks it down, hits its floating level. It's continuously holding its move, right? Like if you were to look at this thing, it's just kind of continuously holding its move, right? So then you could use this as a ladder point. So you could use this as a ladder point to justify that trend from here to there, right? So then if you're saying it can hit the hold level, like that would be a good spot to look inside of that hold level. Then you could go further in the hold level too if you wanted to. Hits the 5 minute backside, hits the 5 minute front side. Is there any hourly stuff here? Yeah, I wouldn't start justifying the hourly. Back to the 5. Nope. Go to the 3. That's hit. That's hit. Backside above on the 3 right here. Very thin, but there. Go to the 1. That's laddered, laddered, laddered. Backside laddered. Front side of the move as well. Right there. So then you could say, oh, well, what can ladder the move, right? Like don't break the leg because it's going to break the move. And then that's where you can find that, right? So then you could just whichever you want to leave. It doesn't matter. They're both representative of the same thing here. You've got such a thin price range that it's like these are 70 cents apart. Like what do you like? What's the point? Like just that's fine. And then this would ladder the move, right? So then that can create your range trend right here off of this ladder point. So that's really what you'd be looking for on the bottom side here. So you kind of need to create this range in order to ladder the move. I don't really see there's another part of this move that could really hold it. Yeah, I don't really see another part of this move that can hold it. I'm looking right now, but like what? So what, you have 2 ladder points here. That's just back testing this level. So then it can break down to this floating level here. But like back test level, floating level, reset the cycle on a bigger time frame maybe. I'd rather see the floating hourly. Although it's a 15-minute, I'd rather just see this used. I'd rather just go for the hourly. I don't even know what I'd like to use there. It's obviously not the 4-hour range. So this is the next thing you can pull apart from this is that we've already hit the 4-hour. So why would we go to the 15 when the hourly is still there? Just like on the top side, when you're running down from reverse levels, we did the 4-hour first. Then it went after the 1 level. Then it went after the 15. So we could go 1-hour level. Oh, it's back here more. $15-minute level. and before that 15-minute level is going to be used, you can assume the 15 reverse would be right here, which is already tested. So then you would just go up to right here, which is kind of untested. So then I think you would go to this level next. So then you would go to the hourly, bounce off it, then go to the 15. Then this could create your ladder. Ladder reverse, run through the front side here, ladder reverse, right? Like hit the 1 hour, hit the 15 backside, hit the 15 front side. So then I think that's where you can create that same thing that we talked about earlier on the top there, where you're breaking through levels, right? Where you're breaking through the move. So if that range collapses, right? Like if this collapses where you have like, then you have like, take all this stuff away. Then you can take all of this away and you can just say like your levels exist right there and there, because this kind of needs to hold, because it kind of needs to create a range right there in order to continue to attack this stuff up here. And if it doesn't, then just, you know, expect a gap down to here almost even, which just kind of completely makes sense, right? Because you already hit the 4 hour, and if it's going to break down, then it has to go attack the 1 hour, and then the 1 hour will be attacked, and then the 15 will be in the way, and so forth. So I hope that makes sense. I think that really should tie together how these ranges can work and how we can justify those trades. And then when one range breaks, where does the next range stop? Like we really need to create this. We really need to come down here and kind of test this thing. And then, you know, if we're going to continue to move up, it's going to have to be off this range, because then you have like, oh, go back to your basic knowledge set. No, it's laddering from here to here to here to here. And that's how that ladder is created, right? Because now you have the understanding of why this ladder would be created and how it's created. Alternatively, if this one can't hold, then you're down here, right? Because it's the same logic flow. It's the same logic trail that we did up top with a 4 hour at first up here, right? Like here's your 4 hour, and that got hit and it got blown right through. And this one actually just got respected. That's fine. It can go after the 1 hour now, because this one, then it went after the 1 hour, then it broke and went after the 15, right? I suppose you could also say this 1 hour backside. I suppose you could say that, but I don't really think so, because this is breaking the move up by going 4 hour. Sorry, not like that. 4 hour, 1 hour, 15. Like it's breaking from it's recycling its time frames, as to where this, if it hits this 1 hour and holds, it recycled the 4. But then if it holds the 15, it's starting to strengthen the 1, right? Because the 15 would have to be below this in order to be recycling the move. Instead, now you're in an accumulation cycle. So that would be where that difference lies. A 15-minute above the range, right? So then you add this level here. Oops. A 15-minute level above this range, or a 15-minute level below that range, right? So if you go here, let's delete these, work on this funnel. So now if you go here, test this, fine. You've got the same equation of right here. Like you've got the same exact component as right there. Test this, right? Move down. You're breaking the move down. However, if you hit this hourly and then bounce off of this 15, now you're cycling the move up in accumulation, right? As opposed to hitting the hourly, decycling it to the 15, finding the 5-minute level. Now, if you simply just stop on this level and then use that 15, now you're saying, okay, create the bottom, the 4 hours tested, it held the 1 hour, it's using the 15 backside, right? Now there will be another 4 hour level that exists somewhere. So a different funnel of possibilities based on what's hitting and what's happening, right? But really, you really need to right now hold this. Really, right now, you need to hold this. Yeah, you got to hold this. The range was only the justification for going long and second bouncer, or was it just holding that level again? Don't break the leg. I was about the top of the 4 hour at the bottom there. What about the top of the 4 hour? Yeah, that's what we hit, right? We hit the top of that 4 hour right there. And this is already tested. I wouldn't expect it to hold. The move kind of has to develop a range for itself. Like maybe it could hold off this, but I don't really like that. Holding off this would be, yeah. Yeah, no, I don't really like that. I think this range here has to hold. Otherwise, I'd be looking down here. This isn't a hold level. Bottom of the accumulation of those 15. Like this right here, you mean? It would be not a hold level. It does coincide with like I guess that's like a 15-minute level there, right? The 15-minute reverse, I believe. So while it may look like it coincides, that's not really the important piece of information, because if it coincides as a 4-hour level, it doesn't give you information. Like, what does it tell you if it coincides as a 4-hour level? It can't tell you that, like, if you use it as a 15-minute level, as a 15-minute reverse, it can tell you like this. I just hit the hourly, and now I'm holding a 15, right? Or I just hit the hourly here, and now I'm breaking down to a 15. If you were using it as a 4-hour here, oh, sorry, right here, if this was the 4-hour, you would be saying like, oh, where's that hourly level? You would be saying, where's my level 2 over here? You'd be saying, I just hit the hourly, now I'm hitting the 4, which would tell you that the move is strengthening in a way because you're holding a higher time frame. When in reality, you just hit the hourly and now you're hitting the 15. And then if it hits a 5 and breaks that, then the move is gone. If you were to use it as the 4-hour, you have to understand that that data point is explaining to you that it's starting to strengthen the move. So you'd get like a misreading on that, if that makes sense. You could use a leg of the move, break level, and then you'd be getting down to the really nitty stuff. And then you'd have to see if your hourly was hit first, then the 15-minute was hit first, then a 5-minute level down the leg somewhere. Maybe there's like a 5-minute level down here. A 5-minute reverse right here. Oh, boy, that would be thin. I'd rather see this one here. What might look like strengthening the move because you've marked it as a 4-hour would indeed be weakening it if it's continuing to collapse timeframes. So it's very important that we only use hold levels that are actual hold levels and not just any body that we want, because that's not a hold level, right? It has to be one of these guys, one of these blue guys. BMG, Blue Man Group candle. Yeah, because it's about understanding what that data is explaining to you on the charts, right? Like if that data is telling you that we're breaking the move because we're decycling timeframes, that would be the complete opposite scenario of a data point being a 4-hour telling you, hey, we're strengthening timeframes because we just hit this hold level. Like if you just hit a 4-hour level, you still have a 1 hour below you and a 15 and a 5. But if that was a 15-minute level really, and you thought it was a 4-hour level, you might be looking for an hourly hold level and it might not exist, or it might exist and be completely wrong and you completely lose the move. So it's more important to make sense of the data that you have on your screen just by sticking to that like hard set criteria.
Now, where am I drawing this trend? Because you have it from here to here, which is incorrect.
Oh, the higher time frame one.
Yeah, 3 or 5 or 15 even.
Yeah.
Okay, we have a 15-minute high point. This isn't developed, so you use something like this, right? This obviously doesn't allow me to get out at 96.50 because once this breaks, you're already 96.66, and you're forfeiting all the profits, right? Like you still want to make good profits on a trade. $25 there is a pretty decent profit. That's still like $1,000 profit almost. So who thinks this is the trend, or who thinks this is a good start?
I usually go to like on a time frame where I can connect my two just accumulation candles. So I would.
So what do we do then?
I would go to the 5 first.
Okay.
Okay, and then I would have my trend like something like this.
So you
Yes,
would be
yeah,
like
but
that.
yeah.
Well, I would take it from the top of the. I'd take it from the top of the distribution candle as a base down.
So that can't be right. Taking it from the top of a distribution candle, this can't be right because we always have to use.
But is it not an accumulation candle in another time frame?
On which time frame?
Yeah.
On the 15 as well, yeah.
Yeah, so it's the base of the 5th.
So you could have done the 15 and hard close on the 5.
So exactly, Gilbert, you got it right. So in this trade, highest accumulation point, and work your time frames down till you get the swing of the move up. Here's the first break, right? Dumps down, breaks its first trend, creates its next trend right here, right? So now we actually have a trigger point in this trade, something that is allowing us to execute out of this trade when we.
And this is just decycling that time frame, right?
Got this here, right? Let's go to the 1 minute. We have got this in the moment. So we're going to go right here. So we've taken our first trade, executed. Great. We made something like 50 or 60% profits in a few minutes. It was pretty decent. It was like from here to here. So roughly 50%. So, a cool 12, 13, 1400 bucks. Not bad. Okay. So then we kind of go forward. We take our next point, which is like the perfect entry, saying, if we're taking this trade, what are we saying?
It's laddering down.
Right. It's laddering down. Exactly. So we are accepting and saying that, okay, this is going to ladder the move down. So this is going to be the perfect second entry for this trade, unless there's some deeper range up here. But this is like a perfect second entry. So again, we just trust our TA, right? We have the polarized point of the move. This can ladder it here. This is polarized to here, right? Perfect part of the trade. And we also have this guy down here holding the move, right? So we haven't hard closed this. It's the 1 minute. It's all we really have to go on, right?
Classic reverse level.
There's nothing else. You can put it here. But again, you have to remember that a hold level will hold through trend. So if this hold level continues to hold through trend, you are going to be testing this range to see if you can break up and create a microcycle. So when we're in this move here, we have our next piece right here, okay? Trend is holding, or hold level's holding, great.
Would you have exited your second trade there on that whole level?
And then this is what you want to watch for when you're scalping and you're actually in the trade, is for those, like this has, like, you have to develop some trends here. Now, you don't have that many candles in this trade on our screen. You're on a 1 minute time frame here. You don't have that many candles. You have to kind of have the ability to see that this is going to be creating time frames over time. So like this trend breaks, it's going to attempt to make a move up. If there's some other bigger time frame like here, I would now move to the 3 or the 5 minute time frame to see, is there another hold level that's untested that could continue to hold this move as a reverse, right? Oh yeah, you have a huge leak there, I see. Yeah, that's talked about in great depth on in Butterfly Effect. Still confused as to why the 4-hour level isn't legit. Maybe I have a leak there. Is it has to be a distribution candle on the bottom side? I didn't realize color was important. Yeah, absolutely. Well, color dictates if it's an accumulation or a distribution candle, right? It has to be a distribution candle on the bottom side. I didn't realize the color was important. A distribution candle is blue, an accumulation candle is white. So it has to be a blue candle. So absolutely major leak there. Major leak has to be. That's why we have white on the top here, blue on the bottom here for hold levels. For yeah, I mean whenever you're marking holds or reverses, it's all the same. They're all hold levels. We never mark white candles on the bottom. For hard closes, yeah, has to be that. Yeah. That goes for hard closes as well. I think that's what you're asking. That goes for hard closes as well. Yes. Like you'd have to hard close a blue candle under this blue level, not a white candle. Yeah, hold levels too. Yep. Yeah, definitely a big leak there for sure. That's great that we identified that, because that's going to help a lot, because that's very critical. Let's just say that's very critical. Anytime you break a level of any type, it has to hard close, which is that like below a level would have to be blue, above a level would have to be white. Or green and red, if that's what you prefer. Yeah, absolutely.
Holding.
So I exited at 49.54. So 49 49. Where's 49? I didn't exit yet because I would be looking for a hard close. Like what I would be doing here is I'd say, okay, this is the 3 minute. You can go
Yeah,
forward.
see, that's exactly what I would go to the 3 minute and look if there's like a reverse you can hold. Like this could hold the reverse and create like the 5 minute trend or the 15-minute trend.
Trend, a candle. And you're in this moment where you're saying, okay, you need to hard close this move in order to justify getting out of it, right? Because I was still in at this point at 48. When I saw this move holding, I was still in looking to
Yeah, you wouldn't exit yet.
Get out of the trade. Saying that this thing looks like it's about
this should break it down. This should break the move. Hard close under the level, it should break the move. If you start breaking trend now, you got to get out.
And there's another reason
because that should be breaking the move.
And so
right, like this should break the move.
Fine, this move is pretty explainable here. It just ends up going through its.
It doesn't break the move and it breaks trend. One hard close over the trend and bang, it's gone. So that's like really critical, right? Really critical. This should be breaking the move. It's not. It's possible that it was a 3 minute and it never closed a 3 minute. Obviously, I can't go in here and check the other time frames. It's possible it's a 3 minute here, though. Like this candle here might be the 3 minute right here. Maybe I do in the replay. But anyways, this should break the move. It's not and trend is breaking. You've got to get out of that trade because you've hard closed the trend. After not breaking down when you're doing that, it's gonna shoot up, and you're gonna adjust your trend to the 5 minute.
So there's still something that is missed.
I'm assuming it's a different time frame, right?
The very first piece of this move is here, and notice we're working backwards in time frames. But when you are looking at this, you would be doing the same process, right? You'd be going from the next highest distribution point, right? And we don't have anything yet. We would have had this here.
Yep, that's correct.
3 minute hard closes to here like this, right? And then so we can
walk with the 5 minute hard closer, I believe.
Closes to here like
maybe
this,
it didn't.
right? So
I'll have to check the replay.
A little differently. There we go. Maybe just yeah, sure. We'll go green. Doesn't really matter, I suppose. So on this here, we do have a second piece of this move, right? We have our 5 minute trend that was established from here to here, right? And then in this moment, it actually hard closes to here, right? Which also doesn't give us our 5 minute.
That's why I did that. Okay.
There, that's fine. But indeed does give us this 3 minute.
I agree with that on a scalp.
So
this process, I agree with that on a scalp.
Two trends that we can go based off of. And when I see this hard close right here, right, in this move, past where the 5 minute is, and you could even have adapted it to here. It would have been the same thing. You can see it's trying to break a different interior trend.
Yeah, it's just range trends. Nothing special there.
And the higher trend fuels the move. So when I'm making this decision, like, okay, what is going to let me get out of this trade? Let's delete all of this for a second. You have to use your interior trends to understand
interior trends
holding or not, right? So you have, like, very simply, you have the 15 minute right here, right? So you have this right here, which is adapted to the first.
Yeah, because before that 15 was created, this would have been 15 to 5, and then that breaks and creates 15 to 15.
Back here, but you do have a 5 minute from what starts here to here, and then in the moment, right? You can't see it right now because you'd have to actually go through the reflare tool, which we can do.
Yep, just active trends. Okay.
You don't have any trends at this point. You don't have a single trend at this point. Here you actually do create one. So you actually have a 5 minute trend here. So you can actually go and start hard closing this to see if this is going to hold as well. And it actually does hard close to there, right? So it actually does hard close to there. So you actually have
because that one doesn't hard close. Yep.
Right. And you can see one is starting to break right here. You can see that starting to break. So you can see that trends are already starting to break. So when you're looking at these hold levels and you're saying, okay, this hold level is hit, right? This is actually hard closing on a smaller time frame, even to right here. So you can see where your trends are starting to collapse. Like even right here, it's really close to collapsing. So when we continue to backtest and hold this back here, you're starting to actually move through the move. Takes a little move down, holds its range, which gives you this right here to reshort the move, and it doesn't even come close. It just breaks over its last piece, and it's completely polarized there. But your range is breaking, right? And you can see the moment it breaks when you actually use your interior trends from the highest time frames down. Because in this moment, you would have only had a 5 minute trend to go based on.
Yeah.
And so when this closes, the move is done. And then you have another interior trend in here from back here. It's about right there. It's like this to the 3 minute. 3 minutes. I believe it was this guy right here. It adapts to this one right here. So you have two trends that you're losing. We need to make this one yellow. It's a little confusing. They're very close. Come back to here in the move, right? There's that hard close point right there. So what do you have left on the 1 minute? Right there. 1 minute's broken. So if you were to move this here, the 1 minute is already broken. Once you break over this trend, you're breaking both trends. You have nothing left compressing the move. So at 49, this becomes clear that you're starting to hold the move. That was the final moment right here. This becomes clear that you're breaking the move right here, right? Your interior trend. Once you start holding this move and you actually start holding through this trend, once you start actually holding,
I would think it's in either Future of Trading Remastered or Butterfly Effect on hold levels.
until the move breaks, right? Like it's very much the same thing we always look at whenever you have.
Joe said FOTR. Yeah, I would think it's in either.
When the move like this, your hold levels are designed to break trend, right? So
I would think it's either FOTR or the beginning of Butterfly Effect. I know I talk about an FOTR, but also I think the lesson 3 of Butterfly Effect maybe. Oopsies. Oh, shoot. Sorry, guys. I accidentally skipped through that. Yeah, like I know I talk about it in Future of Trading Remastered, and I talk pretty quick in that course. But it should be on hold levels in Butterfly Effect as well. It should be anyways.
tested by this range here, and forward and forward in the move, right? That range is tested here, right? Yeah, let's go to XBT. And then it's quite simple why it moves up when you start breaking down all these ranges, right? You've got this range here is already testing, it gets tested by this range here, and forward and forward in the move, right? That range is tested here, right? Like this is all testing, whatever this is, whatever's inside of this range right here. Maybe it's here somewhere, I'm not sure, but whatever's inside of this range here, everything below was already tested, right? So you're pretty polarized in this, move until almost right here. Like everything was already tested. So you're going to gap from here to one of these higher levels. This is just a random level on the chart. It's I don't even know if this is what it's hitting, but what is a hold level designed to do? It is designed to hold it through the move, right? So if this continues to hold, you're breaking your trend down. It's the same thing we see interior is what we're seeing out here. It's the same thing. Hold level is designed to hold a move down. And if it can continue holding it down, like I wouldn't even be surprised if we went like this and held in this little corner here and then lost this move and just fell straight off a cliff. Thousands of dollars down to some crazy range down here, or even possibly down here. Just where your polarity points are, right? But it's the same thing here, right? Like it's the same thing we just looked at, just on a larger time frame. The hold level is going to continue to hold a move. That's it, almost as an origin point, right? It's going to just continue to push it down and through the move.
It was actually an origin point there.
This is, once you break over this level here, this 97.20 level, the moment of polarization, like that's already tested. This range here, whatever these two candles are testing is already testing whatever's inside of this range here. And then what is this range testing here? Right, this is already testing whatever this piece of the range is that is being tested here. Right, whatever this is testing back here was already tested. It's somewhere inside the candle. Let's take the magnet tool off. Whatever this is testing here, this range is already tested. This range is already tested. This range is already tested. So when you're looking at this move, this is the only level that's been continuously holding the move. So that's fine. It's a whole level that's just continuing to hold the move. Now, would I have guessed it would have went to that level? No, probably not. I would have been dissecting. Well, you can't dissect this range because this hold level is already being, like, what you could do is you can take, like, first you identify what can't be used. Okay, so this can't be used. None of this can be used because it's already being tested here. So that can't be used. Can this be used? So some point from here down could be used. So you have this right here, and then you can work down from this. So this is already tested, actually. So it has to be between here and here somewhere. There has to be something in here. Otherwise, it's just gapping up to its next range.
And then at this point, you're just cycling down in time frames, ranges inside of ranges, right? And like just finding the greedier points inside of the same level. That's exactly what we're doing here on the replay. So that's nothing to go over with that.
This is already tested too. That's part of that 12-hour range. So yeah, that's already tested. There's not really anything here. Take another look at it, but I didn't see anything. This is tested on that 12-hour, so it can't be that. That's that same thing right there. I wonder if there's something in between that. You could possibly have this. Really doubt it though. You're more likely to be right here. Because this, whatever is inside of this candle, is already being tested there. No, that's already tested here. It's part of a larger range. Whatever this is. So there's your two levels. Your two levels that have already been tested. I don't think you can even use this. I think you just have to go to the larger level. I'm pretty sure there would be a short that happens here at 10.3, but yeah, it's not something I would feel. It's how thin is the move? Where could it go?
Something important to note here is that you're looking at a move right now, and I don't have the origin marked here. You can't see it on this daily time frame. I believe it would be the 4-hour here. So you're testing levels underneath that origin point, right? So that's just important to keep in mind that there would be an origin point here. Possibly, actually, I might have went through this and there's not an origin point. So maybe there isn't, but I would just like to double check that in the moment if I was still there to say, okay, is there an origin point here? Like, it would be really important to me.
Okay, let's take this replayer tool off. This is going to take forever. I wonder if there's even a test there at this. This is not a level I would have bought, I can tell you that. No, that's not a level I would have bought. But this makes sense. I don't think I would have been long to that point there. I probably would have exited somewhere around here when I saw the pullback. But anyways, that's you know, when you're dissecting this range here, Dilbert had said earlier, it's going to gap to its next level. You can see there's nothing left to test. Like, that's why buying that 96.85 level, that 30-minute, that's why it's such a good level to buy, because there's
And this became the justification of why it made sense to get out of a short there in that moment, like from the beginning of this video. Why do we get out of the short? And then you can see why when you can understand that there's that gap there to that move and that you're holding that 15-minute level, you can see that that's like it makes a lot of sense now, where, you know, a buy spot would also be exit spot for whatever short you're in, just like that when you start breaking those time frames there. And yeah.
It's either a long over top of it or a short underneath it. Just
I believe
plain
that
and
was the same
simple.
part of the move anyways.
You short when the level
think it
comes,
was.
or you long over top of it. There's nothing left. It's polarized right to its next range.
Not even sure why I'm on the 30-minute here.
Even if
I think
you
just to see
justify the
different time
range only
frames.
being at 9,900, whether or not you caught the whole thing. Yeah, even if it's just justifiable to here, it doesn't change the fact that this is a very polarized level.
Okay, let's take a few minutes of a break, then come back and talk about this. Yeah, really, Bitcoin looks like down here's your target, 36,355. It's greedy, but it sure does look like it's going there. 36,902. I would be looking deeper in the range. I'd be looking back in here. You could, 36,902. I really haven't looked at it like this right here. You kind of want to go to the bottom floating level, like you already have that happening back here, wherever it happened there, right here. So you really want to be on this one right here, because this is that kind of where that trail leads. This wouldn't be, if you were to say you have like two floating levels there, like this one here and this one there, this would be the less greedy one, which for me I wouldn't take. Can it develop? Sure, but I would simply take the lowest one on the chart there. And then after 36,355, okay, after this question, I'm gonna take a 2-minute break, get a water. And then after 36,355, yes, okay, this one here, if that holds, the upper levels you drew are still in play. Yeah, I think at that point you want to think about targeting in here, right? I think you want to target. You have two options. Come on. We just want to make this a little thicker, right? We just want to make this a little thicker and a little brighter. 5-minute level and then the 1-minute level in here. I would even just use this part of it. Something like that. Something like that continues the ladder. Just looking at it visually, it continues a ladder. It continues a ladder point from here to here to here to there to allow it to go attack that higher level. So yeah, it's what you're looking at. You could take 4% here. You could try to go for 6. If it stops here, I think that tells you a lot more information than if it goes up over here. If it stops here, it's telling you that the trend is needing to break. And then once that trend breaks, it's likely going to blow through the 5. If it goes straight up to the 5 or even the 1 inside of the 5, it just is telling you that the trend is not ready to be adapted yet because it's still hitting reverse levels. So, okay, we're going to take a 2-minute here, and it might be 3 or 4 minutes. I need to get a water. My throat's kind of scratchy and sore. Yeah, I think today was a really good example of how we can continue to develop timeframes, how we can start looking at ranges differently. Yeah, I think today was a really good example of that. Takeaways from today. One of the big ones is how to cycle up into timeframes, just like with trends, just like we learned with trends a few weeks back. Now we learn how to do it with levels and reverse levels, like before it was trends, and how you break an hourly and move to the 15 and so forth to create accumulation. And now when you're really thinking about breaking a move, it's the same thing with levels. And when you have that chain of reverse levels hit, you have to analyze the charts and see why, hey, are you fighting against an origin level? If you're fighting against an origin level, it's going to be hold levels and trends that you need to pay attention to. And if you're fighting against reverse levels, then it's going to be ranges. Like there's certain things that I don't want to say coexist, they all coexist, but there's certain things that coincide with each other. So today was a really good example of how to look at levels and structure trades and smart buys on hold levels, which is probably a pretty big piece for a lot of people. Since we don't really buy trends, they act more as safety features in trades, confirmation to stay in or points where we can get out. That's how I like to look at trends. But then levels is very, very much those entry and exit spots. So that's like your criteria for entering and exiting those trades. So that's really neat, because now you're starting to develop the thoughts of, okay, where do we go after these levels? Like what's next? Yeah, I see when you're here and you go after this 4-hour, and then you go after the 1 hour, and then you've gone after the 15, and now you've only got the 5-minute left. Like it's the same thing, right? You're decycling these levels to the points of polarity, right? Like if you've broken the 4-hour, well, the next is the 1 hour. If you've broken the 1 hour, well, the next is the 15. And if you've broken the 15, well, then the next would be the 5. And then just with the realization that inside of each of these levels, they can have ranges that get hit. Like if you had the 15-minute level and it went, right to the top of the 15-minute level to a 1-minute level inside of that 15-minute, realize the 15-minute reverse is what's going to be hit next. If you've already followed your trail through the 1 hour reverses, then it's going to be the 15 reverse, because you're only left with so many options at that point. And then same with this 5-minute level. Like if we hit the 5-minute level exactly, that's going to be different than going up to 771 or 895, I believe is where the very top of it is. It was something like 895, right? It was something up in here. There's like a pretty crazy level. It's like 860 or something. I can't remember exactly where it is, but you know, if you go all the way up to 860, realize that the 5-minute is the next one. And, you know, that can also in a way act as a shield, because if that 5-minute reverse breaks, then, you know, you've really got nothing left. So I think that's a really great way to look at charting when you're developing expectations. No, I'm not moving my mouse. I'm just talking. I haven't moved my mouse. Just more so talking about the trail of levels. Seems only a matter of time and not giving up until it feels like you've seen it all before. Yep. If you don't have audio, refresh. You should have audio. Yeah, I mean, you can just simply go back into the replay and just walk through it again. And, you know, you've got your 4-hour level right here. So, like, once this is tested, just look for where your hourly trail is, right? 4 hours tested there. I guess we have to go backwards 1 candle. 4 hours tested here, right? So now you would say, okay, well, where does the hourly exist? So then you would start from the top and you would go here. That's right there. More likely right here, because that's the reverse, right? Yeah, it's right there. Remember, it can be the body of the wick. This one's already tested, right? So it can't be that. And this level's gone through, so body or wick, whichever you fancy, right? Whichever one makes more sense when you break down the time frame. You want to get greedier and get a better entry, or do you want to ensure that you don't miss the move right there, right? And then once this one is already tested, then you would just go back to the you'd go to the 15 here, and you would just say like, okay, well, where's the 15, right? Can't be there, can't be there, can't be there. So then it would be right here, right? Like that would be the next one. That would be your 15-minute, right? I'll just color this one nice pink color. So then when you just go off and look at the possibility of levels that can be hit, you're probably going to see this one hit pretty quickly there. Yeah, right there. And you know, really that 15 can be anything from backside to front side, right? It can be anything from there to there. Oh, actually, shoot, sorry, I missed it. It's this one here. That's the test. This is the level. That's completely my mistake. I missed that one. The 15, right? And then, yep, and so forth and so forth. This is where I get fuzzy. We haven't tested our most greediest piece of that move. 38.6. Okay, so let me actually just start removing some of these. 38.6. 38.6, 38.7. Okay, so like somewhere in between there. But we arguably have tested the range. In my experience at this point, I usually cancel my order. We've seen it happen before where greediest point will now hold. Although the greediest pieces carry an increased risk in my opinion. So this is what I would say. I would say that, and so you're talking about 38.6, 38.7. So you're talking about this 15-minute level, 38.6, 38.7. Are you talking about the 5-minute levels? 5.3 and the 1. Okay. Because you've tested this 15-minute right here, because you've tested this 15-minute, now you're going to go after the 5. And then you have to assume that the 5 is going to create either a reverse. There's not really any reverse points it can create. Like it would be pretty thin. The only real 5-minute reverse you could create is off of that 1-minute level, which would also ladder this part of the move. So in a way, you would almost want to go back and see if there's an origin that you'd missed at this point. Like in a way, you'd almost want to go back and see if this was tested. It's not. So it's not an origin. This is kind of maybe where I would start to think like, okay, let's make sure we didn't miss anything. So then let's just take the replayer tool here because I didn't really check for origin levels. And let's just make sure we didn't miss anything that was like kind of critical in this moment. 5 right here, that would have been the first level, but it hard closes, so it can't be that. Origin level could be here. So that's something that it could be. I would also check back in these time frames. Obviously, it can't be that. Let's go to the 1 hour. Let's start with something a little bigger. Hourly origin level. So let's maybe just mark this a little differently. So this is where I'd start to look in that case WD. I would start to look to see if there's an origin level. There's no 15-minute here. This is laddering the move, so that's not a test. So it can't be that. Now, this is not to say this isn't even an origin level, because you know what? It can't be this because that's broken. Could be this 5, but I really don't buy that. I buy the hourly. It's not the 5, it has to be the hourly. So you have kind of like a 5-minute and an hourly like that. I wouldn't look any lower time frame here. I don't think there's a point. So then when you go to this move, you can just actually take the replayer tool off. When you go to this move, it's not really an origin level, is it? That's a point where you could go to and you could pull back off of that. So now you've introduced one more point. So let's go here. So you could, in theory, create the origin. Let's go like make this even greedier. And at this point, I would say, okay, let's go to a larger time frame so we can see more of the chart. I think at this point, you would be breaking the ladder if you hit that origin. So I don't think the origin would pull it back. So I think that's where you have to say like, okay, there's an origin level here. Can this be created? I think the only way the origin can be verified is if you went above it and then came and attacked it again. At this point, it's not even an origin level yet. It has to hit it once more first. Like right now, it's just a tested level. If it rejects it again, then it can create an origin level. Like, I mean, you can leave this open to the possibility that an origin level could be created here, but you're kind of spinning your wheels because you're kind of just saying like, oh, maybe there's a level that gets created there. Yeah, maybe. You know, that's kind of what we can go on is that we have a 5-minute level. We have a 1-minute level inside the range. That continues the ladder. And then we have the trail of events that lead up to that. If we didn't have a 15-minute, a 5-minute, this kind of queue of events that had happened that leads us to this 5-minute, like the 5-minute is what can compress the move. If we didn't have that, I would say, sure, you can go up and create an origin level. You could spike up there and then it could reject something even higher to create a ladder point. But it's kind of already created its ladder. Ladder from here to here to here. It's kind of already created its ladder. And it's already been back testing all the origin levels while respecting the ladder. So it would be really tough to see it hit an origin level here. It's not that it's not possible, but I definitely wouldn't be shorting that. I think the risk of taking something higher than say like 38.8 here, I think the risk of taking something higher is you're risking the move completely breaking down. So I think you whether it pulls it back or not, I think what you've taken here is like a super high risk trade. Like, okay, there might be sick profits there, but like the risk, does it become worth it? Like, is it a smart trade? Well, I guess if it works out good, it was a smart trade, but I think it's a pretty risky trade. And I think because you've seen the collapse of all the reverse levels back testing each other, and the only thing left that's a 5-minute in this chart. We did create that 4-hour here too, so yeah, I mean, you're kind of still within, like, it's okay. It's okay to create this 4-hour and be under it. I think it's fine. Where do you go below? Yeah, I think it's fine. I think more importantly is to see if this 1-minute level inside the 5 can create the 5 as a reverse. And if it does, then you have your options below of where you'd go. So I think where, you know, to answer your question, the greediest piece carries increased risk. I would agree, but I would say that the greediest piece here is the origin level. I would say it would be relatively safe to buy the most extreme point of this ladder based on the fact that there's a 5-minute level there that can reverse in the future by hitting the 1, which would be the greediest part of the ladder point, instead of trying to go above the ladder point. So you're breaking the ladder point and then hitting an origin level and then rejecting. I think that's getting on the side of too greedy. So I think understanding the greediest piece there might change where you're looking to take this trade, maybe, because the greediest piece can definitely be seen a lot higher. And you could even go something like really silly, and then you could even go like this and say, well, it's an untested body. Maybe there's a range inside of that. with an untested level, and now you've got, you know, an even greedier piece. Like I think this stuff up here represents more than likely you're breaking up, and this just continues a ladder and continues to move it down, and just it has trends on higher time frames, and just it has all those stuff that makes this thing a great trade, and that becomes a smarter trade. When you lose the range, it becomes an origin orca. So like you would need to lose kind of this first. You would kind of need to lose like whatever your larger trend is that onset that attack. Like if you think back to Future of Trading, when I said attack a level and then break the move, like it would have to kind of break the move down here, or it can just test it a second time. It can be either. If there was no 5-minute level, Dak, it would be really tough if there was no 1-minute level. That would be a scenario where the 5-minute level was created with the 1-minute level candle at the same time. So it'd have to happen at like the 5 decimal. So within that, there's also the 3-minute, which happens outside of that unless it's every 15-minute intervals. So it has to be 1 in 5 1-minute candles, which is a 20% chance, and then 1 in 3 time frame 3, 6, 9, 12, 15. So another 5 candles on the 3-minute, because it's only every 15 minutes gives you a number divisible by 5. So then you have a 20% chance every 5-minute candle that it's a 1-minute, and then 3, 6, 9, 12, 15. Another 20% chance, so 20% chance on a 20% chance. So that would be a pretty unique scenario, because now you're talking about what's 20% of 20%, right? 4, right? 4% chance of that happening. 4, 8, 12, 16, 20. Yeah, 4% chance of that happening. So a 4% chance every 5-minute candle has no 3-minute hold level inside of it, and no 1-minute. So, you know, roughly 1 in every 25 candles, 1 in roughly every 25 5-minute candles, and those candles have to be a hold level in a range. So you're probably talking closer to 1 in every, like out of all the 5-minute candles, it would be 1 in every 25 that could, you know, from a number standpoint, that could hit that criteria, 1 in every 25. And then out of every 5-minute hold level, you know, you probably have like 200 between. So 1 in every 200. So 1 in every 25 divisible by another 8. So what's 0.8 of 4? 0.5% chance that happens. Very rare scenario. Yeah, I mean, it could happen. At that point, you would just like not look to, like, it's a pretty rare scenario. Half a percent chance. 8, 16, 24, 32, 40, 0.5 of 4%. It's not, it's divisible by 5. 0.8%, so just under 1% chance that happens. Yeah, I mean, okay, so under 1% chance it happens. Don't use the greedier part of the range. Just use the 5-minute. Very simple answer. Just use the greediest level, which would be the 5-minute, if that was a scenario where the 3 and the 1 didn't have a hold level, but also had the 5-minute created without that range inside. Because you're talking about you know, when you see tops and bottoms that are 5-minute levels, you're talking about like a 0.8% chance that it's there. So I would be mindful of that. Like it's going to be extremely rare. Like, so every 100 times this is created, it takes 120 of these 5-minute candles like this that are created at the very top. It takes 120 of these to create that criteria. So 120 tops and bottoms. Like it's really goddamn rare. It's like a 0.8% chance. I would be careful with that. I wouldn't be careful. A very simple answer. If there's no 1 or 3 minute in it, the 5-minute is actually the greediest, use a 5-minute. Very simple answer. Yeah, WD, going back to your question, because I think it's a good point to raise, and it's important. Like, I think this becomes safe because it becomes very clear that if this level isn't holding, there's nothing really left to hold the move, so that your stop is really tight here. Like your exit criteria on this, like you've been in leverage trading, so you know how it is when, you know, you're on 1-minute candles, you enter this trade at this level up top, And you see pretty quickly what's going to happen. Like you enter this level up top, maybe it goes here, maybe it does like gets a little scary and does this little dance here and goes like this and kind of floats like this somewhere. You quickly see like, okay, where the trend is developed. And then if that just continues to hold and, you know, just sits here and, you know, it's like, oh, well, you got a range on the bottom here. It goes down like that and that holds. And then it goes like this. Like your stop is very easy to plan in this scenario. So I think that this becomes a very easy to manage trade at this level. I think at this level, it respects all confines of what the reverse and the entirety of the move is telling you. I think it's back confirmed by the ladder point. And I think if you break that 1 minute level, and there's many ways you can break that 1 minute level. You could create a range and break a trend like I just drew. You could just simply go up to it and hard close over it in a few candles and get out. I think it creates a very easily tradable scenario where you can say, oh, like this no longer looks like it's going to be moving down. Like it doesn't look like it's going to pull the move back. Let's just get out. And then, yeah, okay, fine. So then if it goes up here and dumps, great, so be it. You took your shot here. If it goes up here and dumps, great, so be it. You took your shot here. These are really hard trades to manage. Because if you're trading an origin level, it could go like this and it could spike over top of it in one candle, fall back to the origin, and you're like, oh, we're going to dump the move now. And then all of a sudden it's gone and you're liquidated without even like, that's the risk of trading an origin level before an origin level is created, because it could have this like ridiculous reaction. So it becomes very hard to trade. It becomes easy to lose money on those trades because they don't really give you a chance to exit. They're just kind of gone. And then if that origin level is breaking, who's to say it didn't hit this level and pull back and just sits here and closes and then skyrockets up as well? Like there's scenarios in these two levels where you just completely are out of the trade, as to where this is a lot easier to manage because it is representing the ladder point and it is representing the hold level and the reverse level. So once those break, like these are no man's land. Could they pull back the level? Yes, of course. But how to actually trade them becomes another thing completely. Because they're like, I'm sure you've seen it many times, a level like this, and it just snaps out of its mind. Just sometimes even just ignores it and goes straight through. As to where this level, this like 5 minute range of the 1 minute level inside it, you know if that 1 minute level is breaking, like you're breaking a ladder point, you're breaking the 5 minute level, you're hard closing all these different time frames. It's like, oh, I got to get out. Even if it's just testing these to pull back, it's like you still have to get out. So it just becomes a matter of what becomes easier to trade. Like what becomes the smarter trade is always the way to just piggyback into that. Like what's the smarter trade? Yeah, the smarter trade is just the 5 minute range. With a 1 minute level, you take the greediest part of it so that you know if that 1 minute breaks, you just get out. And it's like very quick and easy to manage that trade. And then if it pulls back off 39.1, oh well. And then it pulls back. But you're taking a really, really volatile part of the charts. Like the risk factor on taking a trade above this ladder point but saying, okay, we're going to go above this ladder point, but not enough to break the move and hit the origin and pull back. That's a lot, man. Especially since you've already hit the 4 hour reverse, the 1 hour. There's no other reverse points up here that really makes sense. Maybe if there was, maybe you could start to offset some of that risk and say like, okay, well, at least there's like a reverse point there. So maybe we are creating a larger trend range, but like you don't really have any reverse points left. And yeah, it becomes a really hard trade to manage. It's so in and out. No worries. I'll have the replay up today. So I think that's like a really good way to think about these trades when you're getting into them in the moment. And you have to pick the trades that make sense, that are smart and easy to manage. Taking highly volatile trades may feel good when you're right, but then they blow out your account pretty quick. Because when you're wrong, it's like it punishes you hard. And when you're right, half of the time you just get out because you're too scared anyways. You take this trade, and what are the scenarios that it looks like after this trade? So you take this trade and it's like, oh my God, it's going to break up. I don't know what to do. It's down here. Okay, get out before we lose profits. And you're like up here and you're sitting there saying, yes, I made a little bit of profits. And then it sinks and you're like, God damn it, I should have held. Or it goes like this and you get out here, up here, you take that little bit of loss, which negates this little bit of money that you would have gotten from getting out here. So the losses you take by getting here because you think the move's breaking versus the gains you take here because you don't want this move to break almost kind of negate each other. And then a lot of times when it breaks down, you get out way too early anyways. So like it holds here and starts going up and you're like, oh damn, it's got this trend. I just broke that trend. God damn it, I got to get out. You get out here, it goes here and dumps way down. And you're like, God damn it. But on the other side of that, it's just liquidation zone up here. There is no like, oh, how much did I make? So liquidation here, you'd be lucky if you make that back here sometimes. So I think like trading that volatility makes it so that your account becomes pretty swingy, like goes up and down really fast. I think that's something you look out for. As to where trading this just becomes, buying the logical point. The 5-minute hold level's there with a 1-minute range inside of it, and like if it holds, you have like a pretty clear reason to stay in the trade, and you're not kind of wondering if this is breaking up or down. And yeah, so if this holds, you've got multiple percentages that you make, which becomes a lot safer than kind of having enter a trade here 25% of the time, you get out here 25 here, 25 here, and 25 here. This is too volatile. It's too much swinging in your account when you can just take the safer trade, which is here. And if it breaks your level, you get out with a very small loss on profits, because that level breaks very close to inside your range. And you don't have these scenarios where you're getting out here and you're liquidating up here, because if this breaks, you just get out, pay a small loss. You would never get out of this trade right here. If this is falling, you just let it collapse. So it takes out all that in-between movement. Like liquidating this way no longer becomes an issue. Stopping out here so you lose like 10 or 15%, yeah, no big deal. Getting out here no longer becomes an issue. So you either lose 10 or 15% on a stop, or you're making multiple percentages. So like the risk reward becomes way better when you're trading this type of moment than, starting to look at these. Your risk to reward is just like so much smarter. So yeah, that's why I like the 5-minute, but not really a lot other than that. You need to have room for error. Yeah, and like it's all about taking smart trades, right? And that's what we're going to be getting into in the next month here, is